सब्सक्राइब बटन पे क्लिक कीजिए और हमारी रेगुलर वीडियोस के लिए बेल आइकन को दबाना ना भूलिए।
Hello friends, welcome to a digital blogger. Today we're going to talk about intraday trading rules that you must follow. All of these rules are coming from experienced traders across the segments. We will talk about what are these rules, why do we need these rules in the first place, and how you can implement such rules. Let's get started. Let's first understand why do we need such rules, especially in trading. Now, let's say you're driving a car or you're giving an exam. Invariably, you are already following some set of rules there. If you are not following, you may end up risking your life, you may end up risking your car, you may end up risking your career as well. Now, similarly, when it comes to money, when it comes to share market investments, what is at stake? Your hard-earned money, your hard-earned capital. And if you don't really follow any sort of rules, if you're just going there, putting in trades, and then thinking, okay, I'm going to make some money at the end of the day, that's not going to happen. You have to make sure you follow some rules. In this video, we'll start with each of these rules and talk about the importance of these rules and why do we need them in the first place. Let's get started with the first one. First and foremost, create a consistent trading plan. I'm not saying create a trading plan. It has to be a consistent trading plan. Becoming an intraday trader is not a cakewalk. You must know what you are getting into and you should be sure of it. Start with knowing whether you should do intraday trading or you should do delivery trading, because both of these have their own pros and cons, and you should realize where you fit more. Now, an investor cannot be a day trader and a day trader cannot be an investor. It's a very extreme statement to make, but at the same time, it's very difficult to juggle between these two roles as well. Once you've decided you're going to do a day trading, now you have to create an elaborate plan. Strategies need to be practiced. Then the ones that are most comfortable with, you need to pick those strategies for yourself. There must be a plan before the day of each trading day, and journals of profits and losses must be kept to keep a track of whether or not the strategy worked for you. There also must be a trading plan for each trade, depending upon what the target must be, what your stop loss is. And intraday trading requires a lot of discipline, let me tell you that, my friend, and making a trading plan is a very crucial part. Now you might be thinking that, oh come on, who's gonna write all that? I'm gonna be busy in putting in money, I'm gonna be busy in analyzing things. Now once you have put in that trade, at that point in time you need to write that. If you don't really believe that, it's better, I would suggest you to follow up with a friend or probably a relative or anybody who's been doing that for 5-6 years at least. You must be an expert in that particular field, and ask them whether they are following any particular journal, whether they have a diary they maintain, and I can tell you surely that they must have some sort of diary where they are putting in their trades. Then trade with the current day trade. Now intraday trading is more like waves. They go up, they go down periodically. It's extremely important for an intraday trader to go with the current market trends. An intraday trader must follow the movements and go along. When the market is bullish, intraday trader must choose the stocks that have potential to go up. Similarly, quick reversals in trends also occur in day trading, and these reversals have to be carefully observed, spotted, and followed. When the markets are moving up, some stocks move more aggressively, and these are the stocks to be traded, as they hold potential for more profits and less risk. Similarly, when the markets are going down, the trade trader must short sell the stocks that are dropping more than the market. A day trader must not fight the trend. He or she must try to capture the market movements. Then get rid of your emotions. Now looking at the picture of Rihanna, don't get excited. The point is very simple. The picture says there are no emotions, at least in intraday trading. Being emotional is the biggest mistake that an intraday trader can make, and is certainly one of the most crucial intraday trading rules that you need to take care of. It involves a lot of volatility in terms of market, in terms of prices, profits, losses, and thus emotions can be a spot spoiler. An intraday trader must keep his emotions at bay and cannot be overly affected by either profits or losses. If you're making a lot of money, don't get excited. If you're making a lot of loss at a particular day, well, don't get bogged down. In fact, losses must be taken in stride and must be learned from. As a rule, an intraday trader must know when to leave. You must be patient and should wait for the pullback so that you have low risk entry and exit. Also, you must never blame the market for losses. Alright, market gives you opportunities. It's the trader who gets to make the profit, who gets to make the loss. Disciplined traders do not blame the market, the government, the companies, or anyone else for their trades. Next rule is gather the profits when you can. Now, during intraday trading, all the ups and downs happen very quickly. When the profits are earned, the trends may reverse themselves immediately and start going against the trader. Therefore, an effective trader must follow the rule not to get carried away by greed and convert his paper profit to real profit as soon as possible. The trader must make the profit and exit the position when his objective is achieved. The time available to capture and convert these profits is very less, and my friend, you should utilize that time very effectively. Then avoid over trading at any cost. Now let's imagine if you drive too fast, well, it's dangerous for you. If you eat a lot of sugar, again, it's very dangerous for you. So when you're putting your money in the market, and a lot of it, if you're doing over trading, well, it's a problem. A common mistake done by a day trader is to take positions at all time of the day, every day. This is not how intraday trading rules work. There are times when market do not trend. There is no trend. There is nothing happening. Why would you want to put your money? Why would you take a position at that point in time? A disciplined trader goes slow when the market is choppy and even may not even trade when the market is horizontal, and does not trade till the market is stabilized. Make sure range of movements of price is high enough so that rewards exceed the potential risk. You have to figure that out and only then put your money into the share market. Otherwise, it's not worth it. This is one of the most basic and one of the most forgotten rules. Use limit orders instead of market orders always. A market order is an order to buy or sell immediately at current market price. It is filled as long as there are buyers and sellers. The price of execution is not a factor. Whatever current market price is, order is going to get executed. Limit order, however, is when the maximum purchase price is set for a buy order, minimum selling price is set for a sell order, so that if the market does not reach the limit price, the order does not get executed. In this particular type of order, you are in control. You are telling the market, this is my price. This is where you decide. In market order, market decides the price for you. So avoid market orders at any given cost. Then keep learning. It's very easy to say this, but very few people do that. Now, intraday trading is a job where learning never ends. Each trade and each aspect of trade teaches you something. An efficient intraday trader must be very open-minded. He or she should not be stubborn. He or she should not say that I know everything, I know how to make money, my strategies always work. Now, these are the kind of people you should stay away from, because these are the people who don't really want to learn anything. They think that they know everything. The day trader must keep himself aware of all the happenings around the world and be very well prepared of what is coming his or her way. One of the most popular rules of intraday trading is to perform appropriate research and analysis. This is what backs your work. This is what backs your profit. If you are looking at charts, if you're looking at your company performance, looking at fundamental analysis, looking at technical indicators, things like that, whatever works for you, doesn't really matter. If you're doing that, if you're very objective in analysis, nothing can stop you from making profit. Then trading is a business. It's not an adventure sport. What does that mean? Now, you have to realize, you have to take it as a serious business. You have to be patient. You have to be a very disciplined person. You can't take it as a T20 match and see, okay, I'm going to just make some money today. This is the way I'm going to put in the trades, and this is where I get out. Now, this is very naive to say, because it requires a lot of patience and maturity. Losses are acceptable and a part of the business, but all effort must be made to curtail them. Day trading must be looked at as a business with the bottom line as profit making. When there are losses, a professional day trader will sit back and analyze what he did wrong, what can be learned from his mistakes, and then will make the next moves in sync with the market. Another critical rule of intraday trading is not to be reckless. Trade with the money you are okay to lose. Beginners end up making good money in a short time. They may come under the impression that day trading market is best way to make quick profit, and they might end up putting huge amounts of trade. Well, that is where they actually end up with huge losses as well, and it could be a very drastic situation. For a seasoned and successful trader, it is very important to be aware of losses and put in only the amount of money that he or she can afford to lose. Profits, well realized, must be kept away as cushions and not stored away back into the trades. Finally, use strict stop loss. Just as the way an intraday trader knows when to enter the market, he or she also knows importantly when to exit. The rule of intraday trading saves hefty losses. Stop loss helps to stop the losses at a particular price point, and it covers the position if the price moves beyond a specific limit. Thus, it does not let the trader be carried away by the emotions, the movements, and the capital is kept safe, and enormous losses are avoided by using a stop loss. Now, all of this basically constitute all kinds of intraday trading rules we wanted to convey to you. If you want to have a detailed understanding, you can check out our digitalblogger.com/intraday trading /11 intraday trading rules you must follow. If you want us to suggest a broker that matches your requirements, use this link, ourdigitalblogger.com/free stockbroker suggestion. Links will be provided in the description of the video. If you want us to help you out more on this, keep reading our blogs, keep checking out videos at YouTube, and certainly share our videos, like our videos, and subscribe to our channel. Thank you so much. Bye-bye.